Alright, so let's take a look at the likely scenarios that would play out in the market. So the first scenario would be that the long entry order is triggered because the price moves up rapidly the moment the news is released. And again, the moment the news is released, I find that if it is strong, the order will be triggered immediately. So if it is not triggered immediately and it's like hovering for a few seconds, cancel both orders immediately. Alright, so usually the longest I would wait is 10 seconds. Within 10 seconds, again, if neither orders are triggered, I would cancel both orders. So in the first scenario, what happens? The order is triggered on the long side. So the price moves up rapidly. Okay, so the price moves up rapidly, and when it reaches 2862, what happens? It will trigger the buy. So you would buy at 2862. Now, you may not get filled at 2862. Recall, a buy stop order means that when that price is reached, you'll get triggered and you'll be converted to a market order, which means you will buy at whatever is a market price at the time. So you may not get 2862, you may get 2863, 2864, 2865. But most of the time you get somewhere around 2862. Okay, so the moment your buy order is triggered, okay, so you know that you are now going long, what do? Immediately you cancel your short entry order. Okay, so you will cancel this order with the stop loss. Okay, just click cancel. And again, I'll do a lot of live demos and I'll show you the live demos which I've recorded in a short while. So once your buy entry or your long entry is triggered, okay, it will continue moving up most of the time. Okay, so you're now making money. So when do you exit the trade? So I'm looking at 1 minute candles. The moment the 1 minute candle closes, that means 1 minute is over, right? So if the news is released at 9:30 and 9:31, the 1 minute candle closes, I look to exit. So how do I exit the trade? So say in 1 minute, the price is now somewhere here. It's all the way up here, okay? So these are all the profits that I am sitting on. Okay, so what I'll then do is I will shift my stop loss from here, 2850. I'll shift that stop loss to the new market price, which is there, which could be, for example, 2892, for example. Okay, I'll shift my stop loss over there. And again, I'll show you how I do it in a live demo. So the moment I shift my stop loss there, what happens? Well, if the price keeps running up, then all the better. I'm making more money. And then I could shift my stop loss even higher. So as the price moves up, I keep shifting my stop loss up until my stop loss gets hit and I'm out. Okay. Now, if the moment I shift my stop loss to 2892, for example, and it hits the stop loss, I'm fine with that because I would already have locked in my profits at this stage. Okay. So recall that I'm risking 12 pips. That's my risk. 12 pips is my risk. So if the price moves up by, say, 36 pips, what profits have I made in terms of my R multiple? Well, I made 3R in profits. Because I risked 12 pips to make 36 pips. So I'm risking 1 to make 3. Does this make sense? Okay. Now, so of course, that's the best case scenario. So is it possible that, let's look at another scenario, which is the price goes up, triggers our buy order, right? So we buy at 2862, and immediately what happens? The market loses momentum and it starts to go down and hits our stop loss. Is that possible? Yeah, of course, if that happens, you're losing 1R or you're losing 12 pips. Alright, so again, you don't win all the time. Sometimes you may lose 1R, sometimes you may make 3R, 4R, 5R. My biggest win so far is 11R. Now, is it possible to lose more than 1R? Yes, it is possible. Why? Because if the price goes up really rapidly and it triggers your buy order, you may not get filled at 2862. For example, you may get filled at 2868, for example, right? You get filled at the next market price, which is 2868. So in other words, instead of being 12 pips away from the stop loss, you are effectively 18 pips away from the stop loss. Okay, so if it triggers and you buy at 2868 and it ends up going down and hitting your stop loss, what happens? You're not losing 12 pips, you're losing 18 pips, which means you're not losing 1 hour, effectively you have lost 1.5 hour. So do understand that it could happen, right? It could happen. Now, at the same time, it is also possible that we lose less than 1 hour. Because sometimes if the price goes up, it triggers our buy order, right? And it starts to lose momentum. Once I see it's losing momentum, all right, I may exit even before it hits my original stop loss. In other words, I could raise my stop loss up, okay, and get out before it hits the stop loss. So instead of losing 12 pips, I may lose 6 pips or 8 pips. So instead of losing 1 hour, I may lose 0.5 hour. Okay. So bear in mind that that's a possibility. So like I said, in any trading strategy, you will not win all the time, but you can be assured that if you stick to these rules, when you win, you're going to win really big, and it's unlimited profits. You could make 3R, 5R, 11R. And when you lose, you're going to lose like 0.5R, 1 hour, 1.5 hours. So in the long run, if you keep doing this, you're going to be really profitable. All right, let's take a look at scenario number 2. So in this scenario, when the news is released, the price falls rapidly and triggers our short order. So let's take a look. All right, so price moves down, triggers our short entry order immediately once the news is released. Again, within 10 seconds. If it's more than 10 seconds, cancel both orders. All right. So what happens in this case? The news is released here. The price goes down really fast and triggers the sell order at 2838. All right. So we have gone short at 2838, and once you sell at a price, as it goes down again, you're making money. Okay, so the moment your sell order is triggered, what do? You immediately cancel the buy order and the stop loss. All right, as it says here, cancel long entry order immediately. So when do we exit the short trade? Again, 1 minute after the news is released. So the news is released at 9:30 and 9:31. The moment the 1 minute candle closes, we will exit the trade. And again, how do we exit the trade? By shifting our stop loss to the latest market price. So our initial stop loss is at 2850, which is 12 pips away. All right. So the moment this is triggered, say it goes down, say it goes down all the way to 2800. Okay. So that's our current market price here. So if the price goes from 2838, where we sold it, to 2800, we are now, we have made 38 pips in profit, right? We are 38 pips in the money. So to protect our profit, what do? We shift our stop loss from 2850, we shift down our stop loss to 2800. Okay, so once we shift our stop loss down to 2800, if it gets hit, we will exit with a 38 pip win. Okay, and again, we have risked 12 pips to make 38 pips. So that is a 3R profit. All right. Now, again, it's possible that when the price goes down to 2800, and you shift your stop loss to 2800, it continues going down. And that's good for you because you're now making more than what you expected, right? So it's going down, say it goes down to 2790, 2780. So it goes down, again, you can subsequently shift your stop loss down to keep protecting more and more profits until the stop loss gets hit and you exit with as much profits as you can make, all right? So again, that's the best case scenario. So again, is it possible that we could have a losing trade? Of course, yeah. So it is also possible the news is released, the price goes down, hits our sell entry order, we sell at 2838, okay? And the moment that happens, guess what? The price goes back up again and hits our stop loss. So we would have lost 12 pips, which is losing 1 hour. Again, it's a possibility. But again, when you lose 1 hour. When you win, you make 2 hour, 3 hour, 5 hour. That's what makes it a profitable strategy. You know, it's how much you win when you win and how much you lose when you lose. Okay. Again, is it also possible that you lose more than 1 hour? You lose 1.5 hour. Yes, because again, if the price goes down rapidly and triggers our sell order at 2838, we may not actually get filled at 2838. We may get filled at a lower price. You may get filled at 2830 or 2835. And if that happens and it goes up and hits your stop loss, you have just lost more than 12 pips. Okay, you have lost maybe 14 pips or 15 pips or 16 pips. And that's a possible minus 1.5 hour loss. Okay, but again, most of the time you'll find that your profits far outweigh your losses, and that makes it a really profitable strategy. So let's move on to scenario number 3, and this is a scenario where the news is released and the price doesn't have any rapid movement. The price continues moving sideways or fluctuates within 12 pips of the market price. So in this case, our 2 orders are set in, price is released, and the news is released, and the price, goes up, goes down, goes up, goes down, and not enough to trigger either orders. So again, if neither order is triggered within 10 seconds, we cancel both orders immediately. All right, pretty straightforward. Now, scenario number 4 is unlikely, but it is possible, and it does happen once in a long while. So you got to be prepared for it. And scenario number 4 happens when the news is released and the price moves rapidly in one direction, triggering the buy order. Okay, so let me just show it here. So the news is released, it goes up, right? It triggers the buy order. So now you have bought at 2862. And then it goes down and hits the stop loss. And you get a 1 hour loss. And if you're not fast enough to cancel the sell order, it could go down, trigger the sell order. So you sell at 2838, go back up again and hit your stop loss. And you get what we call a double stop loss. You lose 2 hours on both legs instead of losing on one leg. All right, again, this is highly unlikely, but it could happen. So that is why the moment one order is triggered, we must immediately cancel the other order. All right, so that this is unlikely to happen. All right, but just be prepared that it may happen. Okay, everything's an eventuality. So, last 2 important notes about this strategy before we look at some case studies and I show you my recorded live trades. Again, when the price moves rapidly during the news announcements, your long or short order may not get filled at the intended entry price. Do remember that. So for example, your buy order may get filled 1 pip, 2 pips, or even 12 pips above the intended buy stop entry price. Okay, so when that happens, and if it goes back down and hits your stop loss, you will end up losing more than 12 pips. You may end up losing 15 pips or 16 pips and end up with more than a 1 hour loss. 1.5 hour loss is possible as well. So in order to mitigate this risk, what I suggest is if your order is filled far away from your intended entry price, you can immediately shift your stop loss to within 12 pips of the entry price. Okay, and so by doing that, you keep your risk at 1 hour. So let me illustrate this with an example. So say, again, that's 9:30. All right, and at 9:27, we place our order, right? So at 9:27, again, let's imagine the market price is at 2850. So we place our buy order, okay, buy stop order. 12 pips above the market price. So that will be 2862, right? And the stop loss for the buy order would be at 2850, right? Stop loss will be there. So we intend to enter the trade at 2862 and a stop loss at 2850. So our risk is 12 pips. That is our intention. But again, if the price moves up really rapidly, really fast, triggers the buy order at 2862, we may not get filled at 2862. We may get filled at a higher price because it fills at the next available market price. So say you get filled really badly, and you get filled at 2868, right? So you end up buying at 2868. So if you end up buying at 2868 and your stop loss is at 2850, what is your risk? Your risk is no longer 12 pips as you intended. Your risk is now 18 pips, which is a potential 1.5 R loss if it goes back down again to hit the stop loss. So what I'm saying is, if you get filled at a price way above your intended entry price, what you could do is you could immediately shift your stop loss from 2850 upwards to within 12 pips of the buy price. So 2868 minus 12 is 2856. Right, so immediately shift your stop loss to 2856. So if the price happens to come back down and hit your stop loss, you contain your risk at 12 pips, which is 1 R. All right, so you can do that as well. So having said that, let's take a look at some examples recently of trades I took. All right, so the first example is on the 1st of December, and this is on the dollar Canadian pair. Now, I must say, out of all the pairs, I love the dollar Canadian pair. For some reason, the Canadian dollar has been good to me, and most of my profits have come from the Canadian dollar pair and from the New Zealand dollar pairs. All right, Euro USD I find has not been as profitable. Pound can be profitable, but again, New Zealand dollar and dollar Canadian has been my best results. I don't know if it's a coincidence, but I love these two pairs. They make me most of my profits, right? Okay, so on this day, it was the 1st of December. As you can see on my calendar, at 9:30 p.m. local time, there was 3 major news going to be released: employment change, GDP, and unemployment rate. And they are all red news. So you can bet that the price is going to react strongly to this news, okay? So you can see that I'm looking at the 1-minute candles. Now, I may at times look at the 5-minute candles to place my orders. But once I place my orders, I tend to switch to the 1-minute candles in order to know when to exit once the 1-minute candle closes, right? Okay, so bear in mind that these are 1-minute candles that I'm looking at, okay? Now, you see this big, long red candle when the price plunged? Well, obviously that was 9:30. Okay, so this is the 9:30 candle. So which is the 9:27 candle? 3 minutes before the news is released will be 9:29, 28, 27. So this candle over here, you see the candle? That was the candle where I placed my order 3 minutes before 9:30. So at that point of time, I looked at the market price, and the market price happened to be 2880. So what did I do? First, I placed my long entry. I placed my buy stop order at 2880 plus 12. So 2892. That is my buy stop order with a stop loss of 2880. So your stop loss is at your market price. Okay. Then after that, I place my short entry order. I place my sell stop order 12 pips below the market price. So 2880 minus 12 is 2868. And this sell entry has a stop loss of 2880, again at the market price. So notice again, for both orders, long and short, they have the same stop loss at the market price. So once my orders are placed, I wait for 9:30. And as you can see, the moment 9:30 happened, the price initially went up. You can see this candle, the upper shadow. It went up initially. It was going to go up, but it did not go up high enough to trigger my buy order. Okay, it did not reach 12 pips, and thank God, because if I had placed it 10 pips away, it would have triggered, and then I would have gone down and had a loss. So it did trigger the buy order. It went up slightly, as you can see, and then came down, boom, and it hit 2868, which is my sell order. There you go, 2868, right? So it triggered at 2868 and then went down, and the candle closed there. So 1 minute later, the candle closed over there. So what did I do? Immediately, I shifted my stop loss, which is 2880 on the short trade. I shifted my stop loss here. Okay, and the next moment the price went up. As you can see, it went up here, and it hit my stop loss, and I exited the trade. So I exited the trade over here, and by entering there and exiting here, I captured 58 pips. Okay, so what was my risk? My risk was 12 pips. I made 58 pips. So 58 divided by 12 is 4.8 R. So this was a very profitable trade on dollar Canadian on the 1st of December. Alright, so let's take a look at my next trade for that month, 21st December, again on dollar Canadian pair. You can see this was December 21st, 8:30 p.m. Canadian news, CPI, which is the Consumer Price Index, which is basically inflation data, one of the major news that I trade. So again, we're looking at 1 minute candles on the dollar Canadian pair. This big red candle, you see, that was the news. So 8:30, this was the 8:30 candle. 3 minutes prior, 8:29, 28, 27. So you see this candle over here, this one? This was the 8:27 candle. That was the exact point where I placed my orders. So at 8:27, I checked the market price. It was 2800 at 8:27. So what do? I place my buy stop order at 2800 plus 12 pips, and that's 2812. Okay, and my stop loss is at the market price at 2800. Right after that, I place my sell stop order 12 pips below the market price. So 2800 minus 12 is 2788. So that's my sell order with a stop loss at 2800 again. So again, notice for my long entry and my short entry, both of them, the stop losses are at the same price, 2800. So the moment my order is placed at 8:27, I wait for 8:30. So the moment 8:30 happened, the moment the news was released, you can see the price did not go up at all. It fell immediately. So the price went down and it triggered my sell order. Again, my sell order is at 2788, but I did not get filled at 2788. I got filled at 2786. 2 pips lower than what I intended, and that's fine, right? 2 pip off is okay. So my actual risk is not 12 pips, my actual risk is 14 pips if you think about it. Yeah, but close enough. Yeah. So I got triggered there, and the moment I get triggered, what do? I cancel my buy order, right? Cancel my buy order immediately. Okay. So when do I exit the trade? I wait for this candle to close. So the moment the candle closes here, what do? I shift my stop loss from 2800, which is the original stop loss. I shift the stop loss to the market price at that point. So I shifted my stop loss to somewhere here, which was about 2748, something like that, 2748. Now, I actually recorded this live, so I'm going to show you the actual live trade in a while. So let me just explain it. Now, what happened was, once I shifted my stop loss to 2748, the price kept going down, right? It kept going down. So what happened was, I was now making more than I expected to make. So what did I do? The moment the price went down, I then shifted my stop loss to 2738. So again, as the price goes down, you can keep shifting your stop loss lower and lower to lock in profits till the stop loss gets hit, right? So I shifted my stop loss to 2738. Eventually, the price went up, hit my stop loss, and I made an exit at 2738. So how many pips did I capture? So I entered at 2786 and I exited at 2738. So the difference is 48 pips. So I made 48 pips, right? And I risked 12 pips. Well, actually, I risked 14 pips if you think about it, because I got in 2 pips lower, right? So my R is 3.42R, right? Which is great because I'm risking 1 to make 3.4, which is a great risk to return ratio. Let's take a look at my last trade for the month. Just before Christmas, so this was a great Christmas present, 22nd of December, one day right after that trade. So again, this was a Friday on December 22nd. Canadian news was GDP. Again, one of the news I trade is GDP, 8:30 p.m. Release. Okay. So again, let's take a look. You can see this news created a major surge in the price all the way up. You see that green candle, that long green candle? Again, these are 1 minute candles, right? So that's 8:30, 8:29, 28, 27. So you see this small candle here, that's 8:27. So at that point, I placed my order. So at 8:27, I saw the market price was 2705. So I placed my buy order at 2705 plus 12 pips, 2717. And a stop loss at the market price of 2705. Right after that, I placed my sell stop order, 12 pips below the market price. So 2705 minus 12 is 2695. And stop loss at 2705. So again, I've got my long order, my short order, both having the same stop loss at 2705. Once I place my orders, I wait for the news to be released. At 8:30, the news is released immediately. The price goes up and triggers 2717. Now, in this case, because the price went up so fast, it triggered the order at 2717, but by the time I got filled not at 2717, I got filled at 2729. Alright, so in other words, I got filled 12 pips above my intended entry point. So the moment that happened, what was my real risk? Right, so I bought at 2729. My stop loss was at 2705. So my risk is actually 24 pips because of my bad fill. Can you see that? So instead of risking 1R, my risk is actually 2R. So if the price had come back down to hit my stop loss, I would have lost 2R. So what I did was, the moment I had this bad fill of 2729, I shifted my stop loss from 2705. I shifted it to, let me see, what was that? I shifted it to 2729 minus 12. I shifted my stop loss to 2717. So from 2705, my stop loss was shifted 2717. Right, which is 12 pips below my entry price. So again, if the price had come down and keep my stop loss, I would have lost 1R. Again, you got to be fast to do this. If you're not fast to do this, then your risk will be 2R. Okay, but luckily the price continued surging up really fast. It never came down. It went up really high. And again, you can see the candle close over here. So the moment the candle closed, what did I do? I then shifted my stop loss up again. From 2717, I shifted my stop loss to 2765, thereabouts, 2765. And the moment I shifted my stop loss to 2765, I had protected all my profits. Okay? And what happened? The moment I put my stop loss there, the price kept going up, right? It did not come down to hit the stop, it kept going up. So as it went up, what did I do? I then raised my stop loss to 2775. There. And eventually it got hit and I exited with 2775 at 2775. So as a result, I captured 46 pips. Okay. And what was my risk? Again, if I did not shift my stop loss initially, my risk would be 24 pips. So I'm risking 24 to make 46. So the R is actually 1.9 R win. But if, because I shift my stop loss and I maintain my risk at 1 R, 12 pips, my profit instead of 1.9 R is actually 3.8 R. Okay, so depending on whether you are able to shift your stop loss to protect yourself, that determines the actual R result that you get. All right. So I do hope you understand the strategy. And right now I'm going to show you a couple of the live trades I did. Some of them were winners, some of them were not winners. And so I'm giving you a couple of live examples to show you the different scenarios that played out and how I reacted when it happened. So let's take a look at these scenarios right now.